Hey, everybody. Welcome back to week two of our podcast. Nate here with Dan. And today, the topic on the agenda is the outlook for the commercial real estate market in 2024. Thanks for joining me, Dan.
How you doing?
Good.
Good,
Good as
good.
usual. How about you?
Yeah, I think we got some good feedback from last week's podcast. So keep it going, right? Let's talk
Yeah.
about, kind of 2024 and things just kind of feel, I don't know, maybe the right word is a little weird to me. I think there's a lot of pain coming for people in commercial real estate just because when you have interest rates go up as high as they have in such a rapid fashion, um, that's going to hurt people when it comes time to refinance and to pencil deals.
Yeah.
And I think things are a little strange on the expense side of commercial real estate, predominantly insurance. I'm in Florida, like you, so our insurance costs are completely unpredictable.
Yeah.
And, there's I've got friends in the business that, go under contract on like an apartment building, for example, and then 45 days later, when they go to lock in, a rate on a premium, it completely changes. So I think it's really hard to kind of dial in what your insurance costs are going to be. And I think everybody knows that the cost on things, whether it's materials or labors, just continues to go up too. So, one can look at that as an opportunity because a lot of these operators that bought properties, 1, 2, 3 years ago, a lot of times commercial real estate terms on notes and loans are 3 years. They're anywhere from 3 to 5 years. And a lot of times it's probably 3 years. So assume people locked in on a 3 year term at a pretty nice interest rate. When that rate goes up 300, 400 basis points, 3 to 4% on your interest rate on a low cap deal already is going to spell trouble for a lot of people. And I don't think rates are going to really come down precipitously anytime soon. I
Mhm.
think they'll kind of start to drift down. Maybe after the election, whatever way that goes, things will change. Um, but that also spells opportunities for guys like you and me. I mean, um, it, there's reasons guys got to get out of deals, and their equity situation isn't looking very good, so they want to blow out and move on to another property, and a lot of them have guarantees on the debt, so that that could really hurt people. But at the same time, like on stuff we're working on, creative financing is really something that's taking hold right now. And if sellers want to sell the properties, I'm finding and you're finding that they're way more receptive to doing seller financing, assuming some loans and seconds and that kind of stuff. So I think people really got to embrace and kind of go back and look as to when people, um, how long they own these properties. Like if they've owned these properties for a while, chances are they got some interest rate risk, and it could make sense.
Gotcha. So why is right now, like, so somebody that's like in residential that has been thinking maybe for a couple years why to get into commercial, why is right now the prime time, to get into commercial?
Well, I mean, I have other investments too, like the stock market and stuff. I'd watch CNBC, and all of the pundits and all the experts are just, claiming, gloom and doom for commercial real estate. So I think it's, be greedy when other people are fearful type. situation. And I'm not sure if I'm necessarily going to be greedy, but there are definitely really good opportunities right now. And then I think through 2024, because of that concern and that flight out of an asset class. Now, I think office buildings, Class A office building, high rises, which I've owned none, I never have, I never will. That's just, for an institutional type owner, though. I mean, those deals are probably um, to a large extent in trouble, but I'm talking about Main Street, USA, and I kind of look at it from a point where I just want people to get into their first small commercial real estate deal. Do yourself a favor, make it small and make it in your market. So, um, whether it's a little office building for like I've owned office buildings for my real estate and construction company. I have no interest in paying another landlord. I want to pay this landlord rent
Yeah.
every month. So I went out, and I've always owned my own office buildings. So for real estate entrepreneurs, whether you're a fix and flipper, a buy and hold, you're a management company, you're a realtor, appraiser, banker, lender, whatever, man, you've got a really good asset class sitting right underneath your chair. Just go out and find your first small commercial property, and rather than paying somebody else rent, and see if you can structure some creative terms with that deal. So to answer your question, I think there it now's the right time because it seems like interest rates are going to start drifting lower. Um, the recession, this is to me, it seems like this is the most anticipated recession ever,
Hmm.
which I don't, yeah, I think we're gonna have a slowdown, but I'm not sure we're gonna have like a full blown recession like we did in 2008, 9, and 10. But I think now anything could happen, obviously geopolitically, but I think now is the right time to dip your toe in the water because for a lot of those reasons. And I mean, press hard to find some creative financing on these smaller deals.
Gotcha. Yeah, I know you're talking about creative financing a lot. Kind of talk to me more about that. Like, how many deals have you done that were creative financing, and what are your like overall thoughts on that?
Well, I mean, creative financing can take a lot of different shapes and forms. I've syndicated about $75 million worth of deals. It's probably 25, 30 deals. And what syndication means is basically I'm pooling together investors to fund the down payment, in most cases, to go out and acquire commercial real estate. So I'm essentially banding together people, and then they're co-investing, they're investing alongside me in the deal, and I run the deal. They're passive investors where they're basically putting in money, receiving monthly distributions and portions of the appreciation after a split between me and them. So I've basically creative financed almost every one of my deals. I've also been able to, my very first deal was a $99,000 little commercial building. And I got the seller to do a land contract. And I think I put like five, $6,000 down. Now, this is back when I was like 24 years old or something like that. I just didn't have a lot of money. So I went out and structured a land contract um, where basically the seller acted as the bank. I put some money down, and I bought a vacant building, and I turned around and found a tenant, which just skyrocketed the value once it's now an income property. And I turned around and refinanced that once it happened. Um, and then I sold that building for $250,000. So I mean, there was a significant profit on a $99,000 building that I bought. So I also think so going back to maybe, targeting some multifamily owners that bought properties 10, 15, 20 years ago, they've paid their debt down, precipitously, and they're sitting in a really good position, but maybe they want to sell the property for whatever reason, or maybe somebody inherited a property and they want to sell it, and you could probably structure some really good seller financing there, whether they don't own any debt and they can just theoretically act as the bank. They could come in and provide a second mortgage behind a first, assuming that your bank allows you to do that. So that's a really good way to go ahead and do that. But um, in some cases, you can maybe just take over the payments on some debt. I've also structured deals where if XYZ LLC owns the property, I just turn around and buy XYZ LLC. So it's not necessarily a real estate deal. It's more of a business deal where the bank and everybody else really doesn't know that a transaction happened,
Mhm.
assuming that you can do that in the loan covenants, which is really important to know if you can do that or not. So there's a few different ways that you can do that, or a combination of all the above. And I've done deals where I've got seller financing, but I've also raised money for the equity and the down payment too. So that's my favorite thing in the world to do is talk to people and help people structure deals. We obviously do that in our consulting and advising company. So that's, I think, the thing that people use me for the most.
Yep.
So there's this no standard cookie cutter deal structure there. It all
Yep.
depends, and you got to probe and see, just kind of go at sellers and see what they're willing to do. And um, uh, a lot of times, I think, I've said all along with commercial property owners, I think you'll find them more receptive to doing things on terms.
Gotcha. Yeah, I know you were talking about like how many deals you syndicated, and I think this would be a good topic to dive deeper on a future podcast. But capital raising and how you actually fund some of the deals, especially the bigger deals that you have done. So I just kind of want you to like briefly go over just some different ways to raise capital for your deals, whether it's getting a group of investors or talking to your family or whatever it is.
Yeah, I mean, you could really go both ways. You could go talk to friends and family, and in my experience, now I didn't come from a wealthy family, so there just wasn't any capital there. But I was in commercial real estate, and you kind of get to know people. And I really think that most people are receptive to talking about investments into real estate. It's kind of a sexy asset class.
Hmm.
And if you approach people the right way, which I think is an entirely um, really good podcast in it on its own, if you don't scream to people, I got a deal, and you come across, just completely desperate, I think there are a lot of people that would be receptive to investing um, in your deal. And if you can, like, again, remember, I want you to do a small deal. So for me, that was 99 grand. Maybe that's not necessarily what a small deal looks like today. But if you were to band together 10 people for 10 grand, which I think for most real estate people, that if you've been in the business for a while, that's pretty doable.
Hmm.
I think, that's $100,000 um, cash infusion. You can go out and buy a $500,000 property for that. I mean, that's a down payment.
Yep.
So Um, I think most people are receptive to doing something like that, and you just gotta present it the right way. And that's I've kind of mastered a two-step process to do that when I'm meeting with investors, and that's like your first coffee meeting or whatever with people, and it's the number one thing not to do at that meeting is talk about your deal. You want to develop rapport. You want to understand the pain that people are in, and for most people that are looking for other investment opportunities, it's because they're getting pretty poor returns in the stock market, in whatever bonds they're in. So they're looking to shift a certain amount of their cash into alternative asset class, like, commercial real estate. And then if you're the operator that can handle all the work, people just love to passively invest in things. And $10,000, for example, isn't a ton of money. So
Hmm.
that's what I recommend is people start small, and go find 10 people for 10 grand, or 5 people for 20 grand, and just do your first deal, make it successful, and go do another one. Because I'll tell you what, for me at least, my first syndication, it's like I couldn't keep up with the amount of people that said, "Hey, well, let's go do another one because it turned out really well." And once people start getting those monthly checks, and you communicate with them really well, they want to go do another one. Okay, I'll invest another 10
Hmm.
grand. Then my investment minimum is went to 50, and then it went to 100. So, um, I called them country club raises, where you just go out to a little bit more affluent people and attract money from them. And everybody kind of at the end of the day, they start to learn about you, hear about you, they want to be in the club, right? So
Yeah.
um, yeah, I mean, you know lots of those people
Yeah.
back when you're growing up that were doing in our deals. So
Hmm. All right. Well, I mean, that's all I got for you in terms of questions.
yeah, but I think 2024, this is the year. This is the year to really start to put your plan together, put your real estate investing strategy together. I don't think residential investing has gotten any better.
Hmm.
Um, for the most part, I think there is so few deals out there, and there's a lot of pent up demand for people to buy properties. So that's why I think commercial real estate is something that people should look at. And it's, you know, according to a lot of the experts, it's like this big wall of worry that's going to happen. But I've been through enough of these cycles to know that you can start to nibble on some of these deals, and it's probably going to take you 90 days to do your first deals. So um, there's plenty of time to find that right opportunity, and just make it a small one. Make
Hmm.
your first deal small,
Gotcha.
and reach out to us if you want to, you need help, you want to talk about it.
Absolutely. All right. Thanks for joining me, Dan.
Sounds good. Take care.
See ya.